Hello, everybody who's checked in. I'm waiting for the half hour, a couple minutes, and then we'll get started. I've gone ahead and just put a copy of our strategy workbook in the chat box. If you haven't already seen it, I've just put that there for your convenience. It kind of goes over some of the patterns I look at, the strategy, and it all happens to be scientifically verified. So I'll be starting in just a moment. So thanks, Freddie, for the endorsement. Cool that you're in Cape Town. Hopefully your power won't go out. I understand there's some frequent, hey, John, how you doing? Good to see you as always. You're a glutton for punishment. John's on most of these presentations. So good to see you, John, as always. We've got Naki, if I'm pronouncing it right, from India. Cool. Always like to see the wide geography that people come from. Just amazing. Rich, I really don't suggest broker platforms. I don't endorse anybody. Nobody endorses me. I can get in trouble that way. I just advise you do your homework. Make sure that you go with somebody that's regulated and vetted. I've just heard too many horror stories where people were cleaned out by these, suspect brokers. So, all right. So why don't we get started? Welcome to the fourth and last day of my live trade execution webinar series, subtitled How to Capitalize on Monster Moves in the Markets and Avoid the Market Traps. And I think the second feature is probably just as important as the first these days. My name, again, is Mark Shawson, the pattern trader. For the last 3 sessions, I've been talking about how I use price to make decisions in the marketplace. And I think I can think of no other environment where it's more important to be objective and look at price, because, I have a kind of a TV program with a business program all day, and every couple minutes they rotate one analyst to the other. And the question is, are we going to recession? Are we not going into recession? Is the Fed, going to be a headwind for the market, or, will assets, go up as a hedge against inflation? And you get, all of these arguments, and nobody knows what's going on. And that's fair, because it's a very confusing environment. And so I don't try and sort all of that out. I don't try and parse all of this economic news and try and anticipate what, Powell's going to do. And you can't really build a trading program on that. And so I just only look at price. And to me, price is a combination of either a market's in a trend or that trend is ending. And before it ends, it always puts on a pattern that signals the end of the trend. So sometimes the market goes up and then all of a sudden goes the other way, and people just, where did that come from? Well, there was always a preceding pattern that gave you an indication that there was going to be a turn in that. And so, I'll just walk you through a couple of the emails that, started the week. This was back on Sunday where I advised our members to get short Roku. This is on a weekly chart, so it was trading about 127 on Sunday, and eventually went through the weekly. So this was Roku. So now trading at 117. So triggered that sell stop. And so what I do is I look at the market. I showed them, our members this long-term weekly chart and put a stop under the weekly low. And if you just set your stop on Sunday, I don't know when it was triggered, like Tuesday or something like that, you're now into a $3 profit in Roku. Then on Monday, came in and advised to sell Moderna. That was Monday. Sent out this email, and this email goes out to those on our elite program. If you're interested in the elite program, you'll get an email after today's webinar. I'm not going to try and sell you on anything. It's up to you, whether you like this information and want more of it. So I basically, advise putting a sell stop in Moderna at 171. And yesterday I told you that I got out of Moderna at 154. So I made like $18 as this thing crashed lower. So you can see Moderna, after that sell stop was triggered at 171, went to 152 yesterday. I kind of took some profits and took $18 out of that trade. Then on Tuesday, we talked about Twilio, where I said sell short Twilio at 163. And Twilio's down about, I don't know, in the low 150s right now. Twilio is trading at 152. So, if you got short of 163, you're now $9 to the good in Twilio. And then last night, I sent out a trade to buy JP Morgan. But here's the thing, I always look at my analysis and then require the market to confirm what I'm looking at. And so JP Morgan opened today and went straight lower and never triggered that order. So that is the beauty of the pending order. I kind of look at everything and then I require the market. So you can see, I said put a buy stop above yesterday's high. Today it opened, went lower, and then closed higher. So I actually bought JP Morgan on the close. But this is the beauty of the pending order, where, sometimes I love it when I'm not triggered. It means, I'm not wrong, or I was wrong and I didn't get hurt. So you can see here was the setup. I said put a buy stop where that green arrow was basically above yesterday's high, and it never got there. And so I never got triggered, but actually by virtue of today's price action, I think today looks better than it did yesterday on a risk reward basis. So I actually bought this on the close. So this is JP Morgan. And it's in this funky kind of reverse. You can see how, if you connect all of these lines, they connect almost symmetrically. And then right here at the bottom is this kind of funky double bottom down here. Now, this is a downtrending market. I always say, look at the trend. You should trade with the trend. But there are certain areas where, the market gets into a collection area. And then I look at the price action. And what I saw today was price went to a new low and it closed on the high. Now, not all, I told you not to trade all reversals in a vacuum. But, sometimes the market gets into an area where you can take a taste of something and see if it's going to work. I mean, this is still in a pretty hard, nasty downtrend. But I think the combination, and what I try and do is get in trades where I can, get in with very little risk and, a decent upside if I'm right. If I'm wrong, I'm going to lose a couple of bucks on this thing. So I bought it here. I'm not going to, stay past today's low. Today's low was about 128.73. So you're talking about $2, $2.50. I'm going to risk 250, to see if I can make 5 or 7. So, and if I don't, then, no harm, no foul. I'm going to go, get another trade. But I think the combination where you're in this bottom here, you've kind of got this, what could be an Eve and Adam bottom. So an Eve is always where you have multiple, locations at one support, and an Adam is where you have a single. Now it's, too early to tell. We'll see how the market lifts off. Now, the only problem with this, when a market goes straight down, it usually doesn't go straight back up. So, this thing needs to do some work to get out of this hole. But I think next week the banks announce earnings, and this could be a good place to, kind of get a feel for it. And if I'm wrong, I'm going to lose $2. But this was an email that went out last night where it didn't actually get triggered. So, our members didn't even, so I was looking at this and I was thinking maybe this was going to turn out to be an island. And I even said yesterday that this needed more work. Even if it is going to go up, it needed to kind of put on some sideways thing, do some more work. There's a certain cadence, there's a certain rhythm to the way these bars, and things don't go straight down and then straight up. And, I applied that logic to the market today too, where, markets don't go straight up and then straight down. So the market turned around dramatically today, and I kind of expected that it would, but that's a whole other. So again, I sent out an email and said, put your buy stop above the high. So I was looking for the market to confirm me. I kind of suspected we may be in an area where this thing grabs a bid. And in case it did, just wanted to put ourselves in position to be lucky. But what happened was the market just opened and then went lower. So this order was not triggered. And so these, stop orders are just meant for the day. So now that that day is over, you can just cancel it. Although I would probably just leave it in there. If it hits you, it's going to probably be pretty good. And, what I would do is after today is actually just put a buy stop above here. Whatever the high was, 131.92. So you could just put a buy stop at 132 and let the market do the work for you. And, if the market kind of does its thing, goes lower and then hits you, you could be put into a good move. And I doubt once it makes a new high that it would go down and make a new low at the same time. So, this is something where, I don't think you have a whole lot of risk if you just test it out. So there's a lot of back and forth and a lot of volatility in this market. And what I'm looking for are areas where I can dial in the risk and not be hurt if I'm wrong. This isn't a market about being a hero and being right. It's like if you're wrong, you don't want to get killed. So this is very much a market of stocks. It's not a stock market anymore. There's certain stocks that, I think could go higher. And there's a whole lot of stocks that, I think are going to go lower. We talked about a bunch of them. I talked about Etsy yesterday, was in this triangle, and now Etsy is breaking the lower end of this triangle. And so, I can look at dozens and dozens of charts, but really what I, try and do is understand, what's going on. So when I open up a chart like this, it could be anything, corn, wheat, crude oil, gold. I'll apply the similar. So the first thing I want to determine, and I put a copy of the strategy worksheet. I put a link in the chat box. You can download it. I'm just going to go through it very quickly. So the first step, I look at what is the phase or the condition of the market? Meaning, is this an uptrend or a downtrend? If I had a 6-year-old next to me and I asked him, is this market going up or going down? I think it's very apparent that this is in a clean downtrend. So I always want to get in sync, with the trend. Then I ask myself, is there a precedent, a chart pattern that is guiding me as to, the next trajectory? So This all started off with a very bearish price pattern in the form of a double top, which is simply market goes to a high, backs off, retests the high, and then goes through the neckline. The neckline is simply this line that's drawn through the pattern. And you can see once it triggered that neckline, it puts you into a phenomenal trade. So this is a reversal price pattern. Now, in addition to the double top, we also have a head and shoulders. It just looks like a man or woman's left shoulder. The peak is the head, and that's the right shoulder. And then it's got this funky neckline that's downsloping. So sometimes we see a head and shoulders and the neckline is horizontal. But you can see that this neckline is downsloping because the right shoulder is lower than the left. And what this downsloping thing says, not only is this bearish, but it's likely going to go down very, very quickly. And that's exactly what we saw. Once it hit the 200 level, we went right to 100. This thing dropped in half right after that neckline was triggered. And so this to me is the governing price pattern. This double top, head and shoulders is my reference. So every time this thing rallies, I know to short it. So, I look for a pattern that's going to govern the price action. It could be, 3 weeks ago, 3 months ago. I'll look at patterns 3 years ago to guide what I'm going to do or approach a trade. So once I understand the phase and the chart patterns, then I kind of drill it down to a day or a set of days where I call these my insurance day bars. If I'm looking at a daily bar, if I'm looking at a weekly bar, then it's an insurance week. If I'm looking at a monthly, it's a monthly bar. But it's a bar that, by virtue of the definition insurance, and I kind of made this up. And the reason why I call this an insurance bar is because when I see these bars like this, it tells me where to join this trade and what my risk should be. So to me, that's the holy grail of trading. If you know where to get in a trade and what your risk is, where it's going to go after you enter, we don't know that. We don't know how hard it's going to go, how far it's going to go, in what time frame it's going to go. But if you can control your entry and your risk, that's all you need to know. To my mind, trading is about understanding your risk. Everybody gets into a trade hoping or expecting, they're going to make a certain amount. I try and look at a trade by understanding my risk. And if I can feel like I can get in JP Morgan for a small risk, where it's going to go, how it's going to get there, those are my unknowns. But I'm comfortable buying it today, knowing that I got a $2 risk and, let's see what happens. But, so Etsy, so my insurance day bars, there's two real definitions, either a key reversal. And basically a key reversal, I just look at where something closes relative to the high and low. So you can see on a particular day, like right here, this made a new high and closed on the low. Now, you can't just trade reversals in a vacuum. But, if you have the trend and the direction behind you, so here's another reversal, made a new high, closed on the low. And then, so I will just look at those because what it says to me is the market went higher. By the end of the day, the sellers were in control. Market went higher, the sellers were in control. Market went higher, the sellers were in control. In a market that's going lower. So then I can surmise that, I can then set up my trade. And then the second definition of an insurance day bar is an inside bar. Inside day, inside week, inside month. A bar that right here, we talked about this on Monday, and I said you could put a sell stop right under here on Monday. I said you put a sell stop at 130 and it's now at 120. So this was an inside bar where you can see that bar from high to low sat within the previous day's bar. And what an inside bar tells me is that this is a coil. This is a storing of energy. What this says is that you had a rally here and then you couldn't rally anymore. The rally just stalled and it stalled out within the context of this downtrend. So I'm not looking at these insurance day bars in a vacuum. I'm looking at all of the stuff that preceded it to make a determination about what I do right here. And so once I kind of understand, the phase, the chart pattern, my insurance day bar, then I layer it with the fourth step, which is an execution plan, which says, just like in the case of JP Morgan, if I'm looking to sell something, I put a sell stop underneath the low. And if I'm looking to buy something, I'll put a buy stop above the high. So yesterday I put a buy stop above the high in JP Morgan, and it didn't get triggered because the execution plan is the part of the plan where the market confirms all of this previous analysis. So all my previous analysis is, it's all subjective. It's how I look at the market. But by sneaking an order in the market, it then requires just the market to put you in. So let me just kind of clean this up and then we'll look at this again. So, what I try and do is I try and look at these markets by putting certain boundaries, patterns, trend lines that I can, look at this. Because if you kind of look at this through the lens for the last, since January, you've really kind of gone nowhere. So to most people say, well, this could go up, it could go down. Well, to me, it's just going to go back in the direction of the trend. And so I just look for ways to kind of wait for the time where the market is now ready to go back, after it's done all this vacillating. So today we had another trigger, another insurance day bar. You made a new high and you close on the low and you close underneath this support line. So now you're starting to, make your way to new lows. So, you could put a sell stop in here tomorrow, put your stop loss there, and be in a trade that goes and makes new lows. Does everybody understand that? Martha says, I had it right now. There's a narrow head and shoulders at the bottom. Yeah, so, as traders, we're always kind of forced into this predicament of having to pick what is a guiding pattern. And, it's like if you got here and said, Mark, well, why isn't this a double bottom? This is a double bottom, and why wouldn't I buy this thing? Well, on the surface, and this is where I can't explain it. This is just years of trading and having a feeling. And the thing is, this is the driving pattern. So you don't really see a big pattern like this and then another pattern like that, and then it goes the other way. I mean, things happen. The market is fluid, but basically for me to say that this is a bottom was that it should clean through the neckline. So, to me, this is part of the bottom. And if this were a bottom, then this is what I would look for. I would look for confirmation that it's a bottom, that I would need it to clear this neckline. And then even after that, do some work. And then if it started doing that, fine. Now we have a bottom. So the market will always give you a look that will make you think there's something going on. Somebody said, well, why isn't this an inverted head and shoulders? Because again, this would require, it to go through a neckline, and it would require it to go through there at least in order to confirm that it's turning around, right? So sometimes you see what looks like a bottom, but then you see, these lower highs. So if a market has bottomed, you want to see it make higher lows and higher highs. And instead, what you see here is lower highs. It just leaks. So it looks like it's a bottom and then never gets going and then traps you. So that was the second part of what I said. I kind of teach our members how to identify opportunities, but how also to kind of avoid the traps. And the market will give you a look. Goes up 5, 7 days in a row, and you go, wow, here's big bottom here. Why isn't this a bottom? Because it's a set of lower highs. So there's all kinds of things where things always look a certain way, but this is the real thing. That is the governing pattern. That's why every time this thing rallies, you just have to sell it. And now it's going to leak and probably go through all of these lows and go and make a new low. So the biggest confusion, when we have these patterns is kind of this, where you have the Dow Jones. Where today, you fell and then you had a huge rally. So this is where you say, well, what is the real pattern here? And this is where you get a conflict between a pattern and an opposing price action. Where typically, I don't want to stand in front of these things that are key reversals, but this is where you can have a certain bullish price action, but you've got to be aware of the bearish pattern there. So this is really a conflict. And so the market has been very, very dangerous. And that's why it's been very hard to trade the market. But I instinctively kind of felt, and I told you guys yesterday, the market just doesn't fall out of the, doesn't just fall out of the air. Like I'm looking at JP Morgan just because, it looks like it's a bottom. It's not going to go straight up. When something falls, it doesn't go straight up. Similarly, when it goes straight up, it doesn't go straight down. It always puts on a pattern, right? So, before it goes down, it puts on a pattern that then precedes that. So the market just has a certain cadence, and I actually started buying calls when this thing, was down here, because I just felt like this is not going to just keep falling straight down. It needs to put on some time and probably just do this and build this right shoulder, so that it builds some space. So the market is space and, price and time. And so, typically when you have a huge wall one way, you kind of need to build sideways so that you can build a space, so that you can build room to fall, so that this doesn't become, so it's just very difficult to explain. But when something goes straight down, it doesn't just go, straight back down again. It needs to build sideways. It needs to build away enough time so that it can put some room to do the next move. And so, this is the difficulty of the markets now, where, I could see that this is a bottom and I could see that this is a top, and it drives you crazy every day. I'm trying to think, well, which way is this thing going to go? And so I usually, let the patterns and price action, but, when you get all jammed up in here and it just goes like this, this is where you can, drive yourself crazy. And I just need to let the market sort itself out. I still think we're going down. At the end of the day, you really can't fight the Fed. The Fed is going to go hard, and you can't fight it. And I do think these markets are going to go down, but, it's not going to be easy. The one proxy that I'm looking at is this IGV. So this to me is kind of my leading indicator, my little inside kind of deal. I'm kind of get an insight. So this market has been extremely efficient. People say, well, you have the war, you have high interest rates, you have the Fed, you have all this stuff. Why isn't the market crashing? Well, it has crashed. If you look at PayPal from 320 to 90, if you look at Zoom from 600 to 90, if you look at Beyond Meat from 200 to 30, if you look at Peloton from 170 to 20, if If you look at Restoration Hardware from 700 to 350, if you look at Netflix from 700 to 350, these things have crashed. And yet the indexes are sitting all, 2% off their highs. And so it's been a very big deception. And you've had this rotation underneath the hood. So it's extremely complex, and you don't need to make it that complex. Just find something you understand from a risk reward standpoint. So when I look at this, this is the IGV. This is an ETF that comprises all of the tech and software stocks like Microsoft, Intuit, Salesforce. And to me, tech was the driver on the way up. And I think that it's, I think tech is now giving up its domain as the leading sector, and will likely result in the indexes eventually rolling over. So, we had, what looked like a double bottom here. So you could say to yourself, well, this is a double bottom, and then it also had the added value of having this very powerful price action. So when I look for a pattern, I look for a combination of the pattern and the price action, and you had both here. So, ordinarily I would say this is off to the races. But, to me, you have to say to yourself, well, again, which is the governing pattern? And this is a great example of how the market lays a trap for you, where it looks all good. And then this is a weekly chart, right? So each one of these bars is a week. So you had 3 weeks of sustained buying. You didn't have a downtick in 3 weeks. So if you're looking at this every single day, this thing's going up, 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 after you've seen a market. So we've had this conditioning where people are used to buying the dips, and every time they buy the dips, they've been rewarded. But I think this is a sell the rallies environment, that you're going to get hurt if you buy these dips. And so what I'm looking at is, to me, and this is where it gets confusing. The market will throw you one pattern, and then the market will throw you another pattern, and you go, well, okay, which one is the real one? And this is where it just takes a bit of experience and, what have you. And, I think we're going down. This, to me, is the real pattern. And, you can see how when we make these patterns, you come out of these necklines and then they re-challenge the breakout area. Then it came back down and then it hit it again. And now I think we're gone. And so, you can buy puts in the IGV. You can use this. This is a proxy on the tech sector, so that, I think that, you'll see most of these tech stocks, be weak. And so within this thing, you see this key reversal there, and then you see this reversal here on the weekly basis. And so again, what I say to myself is that this didn't go, it went straight up. It's not going to come, probably straight down. So, I'm kind of looking for any kind of rally in here, and then I will sell that. But I will use this as my reference until it's invalidated. I mean, if this, kept going up, I'm not going to say, well, I'm right and you're wrong. So, and then another way I look at this is through the prism of another pattern that we talk about. It's a little bit more esoteric. That's why I didn't put it in that strategy sheet. It's called the ascending broadening price pattern. I showed you this on gold, where I made a ton of money shorting gold in this kind of program last year. So this is called an ascending broadening price pattern, because throughout the pattern, prices are ascending. It starts out life in the pattern narrow and then widens or broadens out at the top. Now, again, these patterns can be neutral patterns. I've seen ascending broadening where it comes to the base here and then goes and makes a new high. Or if it breaks the low, now I know exactly where this thing's going. This is like having a newspaper 3 months from now, because I know exactly where this is going. And it's going here. 260. So we're at 335. We've got whatever that is, 50 times another 15, 20% to go at least. And markets usually overshoot. I wouldn't be surprised to see it go lower. But that is my guiding light, is this ascending broadening pattern. To me, got violated there. And, if we started going back up through here, then, that would be one thing. But you can see that this week we rolled here right at this resistance level. And I think by and large, we're going to find our way going down again. But it's not going to be without a lot of fun in between, where it's market, but whatever. Dow Jones was down 200 at some point today, and then it was up 300. So it will try and do everything you can to flush you out. And that's why you really have to understand the risk reward of what you're trading. So I could go on and on. I really this week wanted to give you a flavor for what I do, how I look at the markets. If you're interested in any of our programs, check out our, you can inquire through our team at support at The Pattern Trader. We have a website, thepatterntrader.com, and our elite program, you can't sign up off our website. One of our team members will speak to you and make sure you want to do it, tell you all about the features of it. And Tim, if you want to find out, about any of the parameters of the elite program, just respond. I'm sure our team will send you a link after this thing, and you can set up a meeting with one of our team members and they'll go through the whole thing. Whatever the cost is, I would say it's not designed to be a hindrance. We will work with you on every basis. And, to me, risk is a function of knowledge, right? So if I needed a heart transplant and I went next door to my neighbor, that would be a very risky endeavor. But, and I don't know who it is now, but just for a metaphor, there used to be this guy, Michael DeBakey, at the University of Houston. And he was the world leading transplant. Also for you South Africans, you'll remember Christian Barnard in the 70s. He was the leading heart transplant. I think he did the first heart transplant. So if you went to Christian Barnard to do your heart transplant, it'd be a lot less risky than going to your neighbor, is all I'm saying. And risk is a function of knowledge. So the question is, what is that knowledge worth to you, right? So I use these markets as a weapon and I make money hand over fist. To me, there's an ocean of money out there. And I just try and take my pail down to the beach and get a little bit of it using just what I'm showing you here. We can talk about the Fed and the economy and GDP and the rate of inflation and, the discount value of the Ukraine war, but it's all in this pattern. These guys have already done the work for you. The market is an anticipatory and discounting mechanism. It is ahead of the news. It is discounting and taking it, information in and processing it and telling you how it's going to play out. So Simon says, thanks, Mark, getting more clear every time I meet with you with the insurance day bar. So I'm glad that, so Alice is about the strategy sheet. I put it in earlier. I'll put it in again. So here's a link to our strategy sheet. And I'll take a few questions before I wrap it up. I just wanted to, let me just take an informal poll. Did you guys get anything out of the last couple of days together? Do you think that you could see this as something useful in your trading, or is it just completely Chinese? So Mark says, hell yeah. Thomas says yes. Bruce says yes. Peter says been real interesting. Sang says yes. Jane says yes. Tony says great, mate, really good. James says awesome. Freddie says absolutely. Ola. So, I'm actually going to ask you guys, if you don't mind, and I just checked our review website now. So as you saw yesterday, what happens in this business is that people will intentionally come on and try and discredit me and call me a scammer and whatever, even though I'm talking about things in real time. I mean, I just read a review as I came on. I was going to send you this link and I came to this review. This is our review site. It's on Trustpilot, which means that it's, completely verified. We can't, manipulate it. And if we could, you wouldn't see something like this. So there are 220 5-star reviews. And then I just came on and saw this guy's calling me a scammer. So he says, how is this live trading when the market is closed? It's live, meaning that this is not a replay. I'm not trying to purport that I'm trading the markets right now. So you have these bozos. And so it's, first off, really important for me to know how you receive this information. It gives me a lot of feedback. And then, to offset people like this who come on and these guys will come on and try and discredit me and then take you to something that they're selling. So they'll draft my traffic and then try and, discredit me and take you somewhere else. So it's a very somebody showed up on this webinar yesterday and then, somebody vetted it out and saw that they were trying to sell something. So somebody said, why don't you tell people up front you're collecting $300 from each member that registers? Well, that's not true. This is an absolutely free webinar. I'm not asking you guys for anything. I haven't sold you anything, and I haven't asked you to pay for this thing. This is 4 days of my time. And if we don't meet again, hopefully you got some, some value out of it. But I just hope that, you can help me, offset this and also inform me how and I don't want you to just say that you liked it. If you didn't, please tell me why and, give me a legitimate review. This is, not a legitimate review. I mean, and that kills me. And this is why I never wanted to kind of get in this business in the first place. This is an era where you can't control what people are going to say. There's a lot of haters out there, and I'm an old, I don't understand this world of Facebook and Twitter, and I never go on those platforms because I just find the hate speech just so Andrew says, forget the naysayers. I wish I could. It really affects me. I put in all this time, and look, I probably made 300 grand this week. So, I don't know what to say. Remember, social media is poison. I agree. So let's see. Thanks, sir. I'll be in touch very soon. So John says, I now have a completely better understanding now how the market works. All good, Mark. Thanks. So yeah, so if you, I think I put it in the link in here. I'll put it again. So if you care to just put something in the tip jar, let me know how you received this information. You can right here, just write a review. So I would, so Pat says, thank you. My winnings to date are poor. If you want us to help you turn that around, Pat, I'd be, so Mark says, those who call this a scam are missing out on an opportunity of a lifetime. They're the ones who will be in the same place they are 10 years. Yeah, that's what I find. So look, I kind of get it. I decided to do the pattern trader after I saw all of the BS out there. So people are getting scammed all the time. People are getting hurt all the time. And so I think legitimately there's, an expectation that most things out there are scams. And, my whole mission to do this was to kind of wave the white flag, try and be one of the good guys and be completely transparent. So I bought Uber options yesterday. They went into the toilet. I'm probably going to lose my whole thing unless it goes above 34. And, you win some, lose some. But I made an awful lot of money this week. And, I started talking about all of these trades, Moderna, on Monday, Roku, Twilio, all of those went in the direction. I talked about getting in the dollar yen on Monday based on an inside day bar right here. All you have to do is buy this high at, whatever it was, 112 thing, and you're, up 100 pips since then. So, this is live. I'm actually talking about what I'm doing, and then we're watching the markets. So it's very difficult for me to understand why somebody would see fit to call me a scammer. But anyhow, So Uber says may turn around one more day. I doubt it. It could, but I'm not counting on it. It's in this area where I think that it's, trying to stake out a bottom. But, this was my reticence yesterday. As I said, when things go straight down, they don't go straight back up. They need to build away. They need to build time. And I don't think this will get above 34 tomorrow. So it's likely that I'll lose my entire bet. And that's just the beauty and the beast of options trading. Your risk is limited to whatever you put in the middle, but you can lose most or all of it. So Ben says, do you have a preset list of stocks? So I do watch a lot of stocks, and there are so many, and kind of drives me crazy. I mean, there are so many, I have lists and lists, and I put, different things on different lists. And so you can see these are all of my lists. And so I try and put a blend of different, types of, stocks, but there are thousands and thousands of others. And I'm always looking at earnings plays and different things for new ideas. But, you can also drive yourself crazy doing that. So I just focus on a few things. I know the cycle they're in. I'm watching for certain things. So Mitchell says, how do you, can you go over how you exit profitable trades? So as I said at the beginning, discussing stop losses and take profits is a very difficult discussion because the markets get in different phases. So I've been in, certain trades where, I've stayed in something for, let me try and find this. I'll try and, I'll stay in something for, months. I showed you gold, so these are, so this was an example of a yen trade I did where, I told our members to sell short at 111.61 and I got out 600 pips later. But here's the thing. I got in on April 25th and I got out August 12th. So I don't know what that is. 4 months. I sat in one trade and made 300 grand from that trade. So it just depends on what my expectations are. I showed you gold yesterday where I saw gold in a certain cycle. Where's gold? Where shoot. I don't know where it is. I showed you how I shorted gold at $1,900 and had a price target of $1,700, based on the pattern. So here it is. So this is where, I saw gold in the middle of this structure between these, support and resistance lines. So I said in my email, back on this date that my objective is 1,700 when the gold was trading at 1,900. So, my profit objective on different trades is different based on the environment. This is just a washing machine right now. Where if this goes up or down, I'm just looking to take, be exploitive, just take out little bits here and there because the market is. But like with Etsy, I could see it going into, so every trade has its own risk reward parameters, its own objectives. And when I was trading that dollar yen, let me see if I can find that time frame. It was a while ago, but just to give you an example, is that So let me just put on more time here. This is a great example of a couple of things I talked about yesterday. So over like the course of several years, 2017 to 2021, gold was in this descending, the dollar yen was in this descending triangle. And I can start seeing these patterns behavior and start anticipating. So this was a cadence of lower highs against a common low. And I started to expect that every bounce was going to be lower than the next. And, I just expected that it would come back to a common baseline. So when it got right up here, you can see this very little itty bitty bar. And actually in all the years I've been following it, I've never seen a range this small. That is a weekly bar. This is a weekly chart. So that entire range was this big. So these little bars, they look benign, they look innocent, but they can be catalysts for huge reversals. Because what they say to me is that, this is stalling out. This rally got all the way up here and then it hit this thing and it stalled out. So again, this is the beauty of a set and forget. So right there, that week I sent out on a Sunday, put a sell stop underneath the low here at 111.61. Right there. And what happened was it opened into the following week and, started to go straight up. So you can see it opened here and started to go higher. Now, if it went, kept going higher, then no harm, no foul. I didn't just jump in. I had my resting order right there. And so what happened, I think this was by Wednesday. So on Sunday night, I said, put your stop order there, goes up for 2 days. And then by Wednesday, it clips me, puts me in this thing. And then I said, my target objective is down here. Why? Because, I had a feeling that this was set, creating this descending triangle, these, lower highs against a common low. So once you've been watching these charts for decades, you can start seeing them in your sleep and see how they're going to, work out. So I had the double top, I had the inside bar, and then in this case, after that, I had this huge key reversal, made a new high, close on the low. And so I determined that I was going to just sit in this trade. And there were many times where, so I remember when I first got going, I made like 200 pips right out of the gate, boom. And then it took more than half of it back. And you're saying, well, I don't, if you're sitting in front of the trading, you say, I don't want to give it all back. So you reach in, you take it, and then you get out, and then it goes. And I just made up my mind that I was just going to sit in this thing until it went to where I thought it was going to go. So then, I got through that hurdle, and then it went for 7 weeks where it made a new low. And this is where I got really upset at myself because I thought I really coughed up a good time to get out, where it went for 7 weeks and it actually made a new high, went above here, made a new high. And I said, you know what, I still was in decent profits. I was selling this all the way down. And I said, I am determined. I was saying in all my emails to our members, when we were short, I said, it's going to come back to these October lows. And that's exactly where it came to. So every trade has a different objective based on where, in the pattern is, how confident I am. So I got in. So if I can get in really well, so this is what I try and do. I try and get in when something is turning. If I can catch something on the turn and I can get in really well, even though this thing, went up against me, I'm still in profits. And so if I can get in at a really good position, then it's just, so it's very difficult to, every trade has its own different thing. But this is also a great example of how I thought this was, setting up a descending triangle and that we would eventually break it that way. So, I see these patterns and then I set up a certain expectation, but then, obviously the ultimate referee is the market. What I think doesn't matter. And then this thing started breaking cadence and all of a sudden started doing something very different, where you had these lower highs for 5 years, and then all of a sudden this guy popped up here, and now you had a higher high. So this is where the market will trap you. It looks like it's coming back down in this descending cadence, and it'll go the other way. And so you have to, see the opportunities, but also understand how the markets set up these traps. And so, this is, and then I just got on board on the long side and made all this money on the upside. And looks like there's still, a lot left, in the tank here. It's just very difficult to, assess your risk and reward. But this is something that I think is this could be just a blast off. You're coming to old resistance highs, but you're going to go to, decade highs in dollar yen. It looks like this could just be a monster, opportunity. So this is what I look for every day, and it's all about risk and reward. So I'll just answer some general questions. I think you get the idea. If you, are interested, just, give us a call. Let's see. What do you think about a swing trade on Etsy for next week? I don't know what you mean by swing trade. That thing's just going to go down. Would you say you give most importance to the weekly charts? So what I try and do is understand, what's going on. And sometimes I can just look at a daily chart of Etsy and that's good enough. But sometimes, these charts get into new areas or they do things. So what I like to do is work backwards. Very difficult to trade on a monthly chart, understand, unless you want to give it, huge parameters. So if I can understand what's going on, and to me, just looking at this pound yen, and I always get trapped into this where I say, I'm not going to do any more analysis. And then I just keep going. So what I see in this pound yen is this kind of inverted head and shoulders. And unlike, these other things where you thought you saw a head inverted hinge, this actually confirmed by going through the neckline, by going through an area and confirming it. And then it just sat. And the more work it does in a certain area, the better that is. And now this thing looks like it's, going to lift off into the stratosphere. You could see one of these once in a decade moves, over here. So this is setting up for a monster move. You can see it broke out there. And you have this huge key reversal on a monthly basis, and it just looks like the path of least resistance is higher. There's going to be, we're just in this little reverse triangle here. So it's just going to be interesting to see how we handle these highs. But so this is what I look at. And to me, I don't care about the news or I don't ask why. That's never the question. It's what is this doing and how much risk do I have to take, if I feel like I want to get on board. Reverend said, how many weeks or months before an expiration will you take an options trade? I usually do things very short term because it gets much more expensive. But like the IGV will, let you get in on options that are, like a month forward. So I like this where the IGV, the next series expires in a week, but then the one thereafter is a month thereafter. So, I'll start looking at these puts, into the next rally or what have you, if I think that there's an area, and they're very, very expensive. That's the problem. But, the IGV can go up or down 15 points in a day. So yeah, every trade is very dependent on what I'm looking at the time. Say says there's got to be a way to spot the traps. There is. It's just very hard to go into. I'm not going to go into more charts, guys. If you want to just ask me basic questions about the approach, I'll stay on for a few minutes, but I've 4 days of analysis, and every week I do something called the underground trading session. That's tomorrow. Every Friday at 11 a.m. Eastern time, I go through, a lot of charts, go through what the opportunities are. And then for the members in that program, they ask me what charts they, are looking at, and then I'll look at it in that format. So if you're interested in that, I'm happy to go through charts in that session. So if you're interested in the underground trading session, just contact our team and let us know. So thank you, guys. Dave says another great week. Thanks for your effort you put in to share your knowledge and experience with us. So thanks, Dave. If you wouldn't mind just, putting a review, I would appreciate it. Andrew, you're welcome. JJ, Ben, I hope you guys got some value out of this. And yeah, price is a weapon. Knowledge is a weapon. So there's a lot of money to be made out there. I'm trying to build this mousetrap, this 4-step layered approach to guide you and guide me. I mean, this is what I use. So it's not like, those who can do, those who can't teach. I'm trading this every day, and I've found a way to make some dollars doing it. All right, guys. Thanks a ton, and we'll see you soon. Thanks, Shane.
No problem.
We'll see you later. Thank you.